Good morning, everyone. This is Brad Matheny. Today is the 7th of November, ripping right along, almost into the Turkey Day. And I just checked my charts, cleaned them up a little bit, went through my data. Let me get over here to the cycle patterns. Okay, cycle patterns. Wait for them to load. There we go. And we have there's the cycle patterns for today. We're looking at a rally phase in trending mode for the SPY. We are, I just checked, in the biasing mode, still in bearish biasing, believe it or not. So this aligns very well with the potential sideways anomaly trending that I had suggested was going to take place early this week prior to the election. We are still in explosive trending. We've had kind of a post-election relief rally. You can see here really blowing up overnight. And I highlighted yesterday how we might be moving back into this channeling trend, meaning that we could be abandoning this mode over here after the election. Think of it as pressure, under pricing, moving down into kind of a deviation, probably a 1x deviation channel or a 1.5x. And this is the predicted trending that I expected to see. We may be moving more into this kind of a sideways trending here now. And got to make sure we're looking at the right data. Did I place this right? Maybe not. Maybe not here. Hold on. Let me come over here. Yeah, looks like we have some data that does not align properly. 21, 20, 19, 18, 15. This is 1 hour. 25, 27. Yeah, some of this doesn't quite align. 1 second here, guys. Going to try to at least go through the data. You'd hope that it's accurate, right? So we'll get rid of that, get rid of that, get rid of that. And we will start over with this, 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 that, that, that. Oh, I'm not getting them. That, 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 that. 2 more, 1 more right there. Oh, lost it. 1, 2. Maybe I can only get more than 1 at a shot. 2. Oh, how come I'm not getting it? All right, guys, let's try this again. 1, 2, 3, 4, 5, 6, 7, 8, 9. 10, 11, 12, 13. Got it? Okay, now let's drag this straight up. Pretty much right into that setup. Okay, and then we will grab this and drag this right up here into this setup. And we are pretty well set. Okay, so if we do resume this channeling, this is kind of what I expect. So remember, I've drawn these channels here and I've drawn these channels here so we can see this channeling potentially resume. Now, what I'm going to tell you is this is kind of a shift. Think of it as price moving, within this kind of a downward shift. Let's see if I can get it here. And what we're looking at here is kind of a shift here versus a shift here. In other words, price just essentially shifted from, third to second. So here's our price trend from way back over here, moving across this channel. Okay. And you can see how we kind of traded in that channel through most of September, coming into October, and then in late October, early November, right before the election, we shifted down into this lower channel, which is this channel here between this blue level here, and this blue level here. This is what I call a shift. This basically is market. It's like the old GAN fans. So if we come over here and, well, let's look at my crash index and we try to look at a GAN fan, what you're looking at, fib span, pitch fan, where's the GAN fan? Let me find it. Projection, maybe I'm in the wrong area. Okay, again, fan is, maybe it's up here. Pitchfork, angle, trend. All right, we'll just come back out here and use a fib speed fan or a pitch fan. Oh, there it is. Nope, fib wedge. All right, we'll use this. So, when you come out here, this is kind of like a GAN fan. What you're looking at is a shift. Price moves up within an aggressive channel, and as long as it stays above this line, you can see here we are trending above this orange line right here. We're trending pretty solidly. Then it gets down and shifts into this lower channel, then moves up briefly, consolidates again, moves up briefly, moves into this lower channel, consolidates, moves into this lower channel, consolidates, starts breaking channels here, and then shifts downward. Well, what happened when we got over here into this final channel? Well, we stayed in this lower 0.75 channel for quite a while. And that's kind of like shifting. Now, when we come up here, we draw another one from, say, this low up to this high. Now we're starting the whole channeling all over again. So we could shift from this previous channel over here into another channel over here. Does that make sense? They're unique. Think of it like changing your radio station. It's still the radio, it's still delivering the content you want, but it is shifting from one frequency to another, theoretically. Okay, so where we're at with our rally phase, and I've gone through the data today, we have no change in the biasing mode. We're into rally mode, then we move into counter trend rally mode. On Friday, we move into a crush pattern, then a gap potential, a top pattern, consolidation, trending, counter trend gap, top, reversal rally, up, down, up, top, flat down, harami. And basically, I think we're going to be moving into consolidation into this area, trying to post election move into this type of consolidation. Now, you will remember that I had the sell hedge here telling everyone to get to 80 to 85% cash. I originally had a buy hedge back over here. Here it is, buy hedge. I don't know where the other one went, but I must have moved it or got rid of it. I originally had a buy hedge back over here, indicating that, right at or before the election, it would be good to pick up some put options or some call options to hedge against an upside risk. I got rid of it right before the election, I think, because I was very concerned about about a market rotation event and volatility. But we've still got that buy here pattern setting up today. Today should be a fairly solid rally day. We'll see how it plays out. And then I think we're going to get some consolidation. Like I said, I do believe that we are going to be moving into a very tight channel, meaning that we're getting kind of a relief rally right now, post election. And it is carrying over a bit right now, but I think reality is going to suddenly set in come today, maybe tomorrow, maybe Monday. And what we're going to do is we are going to be looking at the markets differently. What's changed is we have a new president elect. We have new policies that will take effect in 2025 at some point in time. And we have, Biden still in office for the next couple of months who could do who knows what. I mean, he's still the president. He can still execute executive orders. We don't know what could happen. But the reality is that we still got end of year Q4 to get through. We've got, all kinds of jobs data, all kinds of market data, and it's going to come back to the elements of the economy and lesser about the election. Pretty soon, in another week or two, we're going to be looking at what's really going on economically and not who's going to be president. Okay, so be prepared. This is all going to settle down over the next 48 to 72 hours, in my opinion. By Monday, Tuesday of next week, I think we're pretty well settled into hey, it's the end of the year and it's the economy. That's what we focus on individual stocks, sectors, and the economy in general. Okay, QQQs, cleaned up my charts, by the way, tried to. You guys can say what you want. I'm going to spend some time drawing the patterns here. Remember, I built a new QQQ cycle patterns, but it's not ready yet. So we have the same type of scenario. We had the pattern yesterday. We got up to new highs. Remember, we talked about the excess phase peak pattern and how this was either a rally, or B, rejection at this blue level. We obviously got up past the rally phase. We still have the SPY cycle pattern suggesting a rally phase. We're going to rally, but we are obviously well above price highs right now. So I want you to be aware that we are looking at really solid upward trending at the moment, attempting to try to set up some new excess phase peak pattern. Something like this will eventually set up, and until that time, we are rally mode. We are moving to new highs. I would urge you that today and or tomorrow, we will probably see some sort of a peaking pattern setting up in the market based on my projections. Remember, that's basically going back over these SPY projections and the fact that we're going to be rallying. Here's our election rally. Here's our post-election rally. Here's today, the green bar. We're probably going to be rallying into consolidation, meaning we're going to have this rolling top, as you see right across here, rolling top setting up, and that's going to be kind of a rolling sideways channel. Then we're going to move into a rolling bottoming pattern, and we are going to be basically trading sideways for the next 5, 6, 7 days, maybe a bit longer. Eventually, we're going to roll into this support zone, buy zone way out here. Eventually, we're going to roll into this support buy zone way out here around December. But my analysis says we're going to be kind of going nowhere for the next like 7 days. So be prepared. Very tight range, great for day traders, but sucks for trend traders. Okay. Gold and silver basing down here had a beautiful excess phase peak pattern. We counted it out into the breakdown, consolidation, and the ultimate 5 over here. Same setup over here. Really was really quite intense to see this play out. We are just above my targeted low levels here on silver, right at my targeted low levels here for gold. As I mentioned to you before, these types of bases and bottoms can take a little bit of time to actually form into a new rally phase. So let me come in here, wrong direction. And we're looking at a momentum rally day in counter trend mode. We are in bearish accumulation with explosive. Now, a momentum rally in counter trend mode would suggest that we are going to see some more rotation. So, it kind of makes me think that we're going to see some more sideways rotation before we get out. And eventually it's going to be kind of like this on the rally phase. So what we're looking at today, guys, is really, where's my little color? Make it a light blue. We're kind of looking at more consolidation, I would believe. And I believe that means that we're going to see metals struggle in this area to try to move and then attempt to break higher. So maybe out here by like November 12th, maybe Monday, 10th and 12th. Let me see what we got going on for patterns. We've got a bottom pattern, a breakaway, breakdown, a blank, top resistance, flat down. Yeah, so I would probably estimate that, and again, this is really more of a guess knowing what I have here, is that we would look at a time cycle of this flagging before the breakdown. And what we would do is we would draw another box about half of this. And we would draw another box of about 1/3 or 2/3 of this. And what I'm doing here, guys, is just trying to get a feel for where we're at. Okay, so let me come in here and kind of play with these areas, see where we're at. Thursday, the 24th at 2000 hours, and Friday at 12. Well, I'm going to tell you that we will more than likely, if my analysis is correct and we do get this pattern, we will more than likely set up some sort of a bottom in this area, rolling out of it, and then attempting to break away up into that area. And that's just simply based on Fibonacci time function. Now, this is going to be a little bit more complicated because we have a much longer structure. But again, this would put us around Friday the 8th. For silver. And we come over here. Roughly that structure. That structure. Yeah, everything does kind of line up for a Friday base bottom, for a Friday move. So this is based on Fibonacci 1/2 to 1/3 structures. So that's the 382 and 50. And I would suggest that we're probably looking at some sort of a bottoming mode in silver today, moving into some post Friday, Monday type move. Now, if you're smart as a trader, knowing that we could have some things going on over the weekend, you'd probably be looking at some possible call options instead of owning the futures. I don't like the idea of owning the futures over the weekend. Really don't like that idea simply because of the risk factor involved. But it does look like we set up a good solid buy zone right over here based on the fact that we have established the ultimate low. That's the number 5. We have established the ultimate low, the number 5 here. We're moving into consolidation, just like I suggested would take place. We've already kind of established a secondary low here, tried to here as well, and we're moving into this counter trend momentum rally today into a nothing pattern. Then we have a breakdown, breakaway, blank, and a bottom. So this bottom in counter trend mode, I would interpret it as potentially a top, but again, we're going to have to see where we're at. We're in accumulation. We could move into bullish trending by here. And so we're going to have to see where we're at. But again, the typical phase of this move in metals is to consolidate, in this case, for about 3 to 5 days, and then rally back up to our last price zone, stall for a bit, and then rally even higher. So again, this is kind of a mode where what I'm expecting to see happen in metals is, consolidating out, rallying up very quickly into this area, maybe consolidating for about the same time as we have down below, about this time zone, and then moving strongly higher. And that's what I'm expecting to see take place. Same thing here in gold. I'm expecting it to consolidate, rally, and like I said, it will likely rally up into this area, consolidating for about the same time frame, about 5, 6, 7 days, and then rally even further. That's typically what happens through these panic modes. So what that would mean is we would get the dollar to weaken a bit, to fall back down and maybe to 104, 104 and a half, and we would see a reprieve in gold, retaking everything that it's lost very quickly, consolidating, then pushing even higher. And we'll go lastly over here to Bitcoin. Tried to clean up my Bitcoin chart as well. Remember, we talked about yesterday how at the morning we had talked about, prior to this new high, about how we had set up an excess phase peak flagging pattern. But remember, here, let me get rid of this. Remember that when we go through these excess phase peak flags, when we come up and flag, soon as we break that high, we go right back into trending, bullish trending. We come up, we flag. Soon as we break that high right here, we go back into trending. So now we've come up, we've flagged, and what's happening now is, I'll get rid of these so you can see. What's happening now is we've come all the way up from this level. We've moved into this pullback and we're looking for our flag. Obviously, where we had found support before, or resistance, was right around this area, around this rejection point, and right around this area where the rejection point of the flag took place. So at this point, we are in a pullback. We are in a downward trend, looking to start to flag to the upside. Flagging to the upside would typically look like something like this, within a range, meaning it would continue to move up until it either A, breaks away, or B, fails below the top and breaks down into our consolidation phase. Then we wait through the consolidation phase and we break down to the ultimate low. So remember, we're looking at this in a scenario where price will continue to move through these cycles of either A or B type trending. And where we're at right now is we have a new high. We are bullish. So in this case, think of it like this: we are bullish trending. We have a possible new excess phase peak pattern. That excess phase peak pattern is in pullback mode now, trying to set up a flag. And at this point, it's either going to be A or B. Outcome is either a flag breakdown or a continued rally higher. So, how do I look at this? Right now, as a trader, I would be expecting a flagging pattern. Remember, we are in bullish trending. Okay, so we need to understand that the outcome, fine, it wants to change it. So anyway, we are in bullish trending. We have a new high. We're pulling back. We're going to move into a flag. So I would be looking for the potential that we might get a move up into this area. That's like $1,000. And that would be what sets up next. So you want to remember, in pullback mode, we are going to pull back until we start to flag. So you want to try to precede these when the timing is right. We're getting this low. We've come up. We got a higher low. Okay, good. Trending indicators are going to indicate that we're moving higher. Perfect. We're moving through the excess phase peak pattern, which means we should be flagging back upward. Perfect. I mean, this is the setup of a long trade right here. Then, as we get up here near the end of this mode, we have to be much more cautious because we're either going to get a big rally phase or a big breakdown. And possibly what you could do in a scenario like that is set up a level here to get yourself out, like pull some profits and set a breakdown level here and say, look, I want to exit my trade and I want to net reverse the trade on a breakdown. Or I potentially want to set up a buy stop maybe up here in this area saying that, hey, if we break out and rally, I want to add to my position. Does that make sense? So this would be a net reverse position to try to get short, and this would be a buy stop to say, hey, I want to try to add to a breakout rally. So if you were to eliminate some of your upward long trade profits right here, which say is a good thing because you caught 800-900 bucks profit. You want to try to knock some of that out and keep it in cash. Great. The rest of it is just floating money. It's an open trade. So at this point, you could go ahead and say, look, I want to try to cut my losses here, which would get you into break even or wherever on a breakdown mode over here. And you could say, hey, I want to add to my position up here, trying to trade either the A or B breakout. Remember, we're either going to get A, the breakdown, or B, the breakout. And that's what flagging does. The excess phase peak pattern always gives you these A and B outcomes. So it's one of the cool things about it is that when you're looking here, you can determine where you're at. We're in bullish trending because we got a new high. Perfect. We're in a pullback because that high has stalled and we're pulling back down. We're looking for flagging. Why? Because we have this low set up here and the potential to set up new highs. What would really confirm this for me is to come back over here and look at this high right here. If I could get a closing price above that level right now, that would be a Fibonacci and a likely anchor bar trigger. So understand that all of the analysis I teach you, Fibonacci, excess phase peak, anchor bars, Tesla theories, Gann theories, they all play out to tell me that, what price is going to do. And remember, I'm not using indicators. You don't see RSIs or stochastics or whatever's on my chart. It's just strictly price. That's all it is. I don't have to look at an indicator to see what's going on in theory. I can. I mean, I have them sitting right down there if I want them. But the reality is this tells me what goes on in the market. So right now I'm looking for another move at this point. If this low holds, we're going to be looking at an upward move here, kind of aligning up with our rally phase, back up into this 76, 100, 76, 200, and then moving into either a breakaway or breakdown trend. And a breakdown trend would start a whole new downward excess phase peak pattern. So this would move us right into, extended downward potential trending. A breakaway phase up here, if this is what we get, this will move us into a new excess phase peak. Okay, so understand that if we get up here, we're eventually going to just move into another flag or another flag. That's the way it works. It's kind of like I don't want to call them evil twins, but the way it works with the excess phase peak pattern is you're either in the downward or the pullback pattern, or you're in a continuation of trend. That's it. But we're either, and again, I'll draw it for you, but we're either in an uptrend, we're either doing this, which is just continued uptrend, or we're doing this where we flag and then break down and then consolidate and then break down to our ultimate low. So understand it's either A, continued trending for the most part, or B, we execute all or part of the excess phase peak pattern. That's kind of it. If you're in trending, you just want to start to keep track of these trends and look for the breakaways. If we get where we fail on a breakaway, then you want to watch how it plays out throughout the excess phase peak pattern. It's pretty simple. It really is. I mean, it's the simplest trading construct that I think I've ever shown people, because everything else is really a bit more complicated, but it works just as well. Okay, so I'm going to leave you guys there. We're looking at a pretty good move. Like I said, another rally phase. We'll see where the markets are. Looks like the SPY is up a little bit. Remember, we are in a rally phase. So we are in a rally phase. Then we're in a counter trend rally. So end of the day today should be looking at kind of a peaking pattern and then rolling potentially downward. Okay. So be aware, we're probably rolling a bit downward into the end of the week, and that could be setting up for, again, a bit of a struggle as we settle through the next 5 to 10 days. Okay, guys, that's it. Talk to you later.